In this section, we will be working out a numerical on comparative income statement, and the question goes like this. The income statements of XYZ is given for the years ending 31st March 2019 and 2020. Rearrange the figures in a comparative form and interpret the results. Here, what they have done is they have given us the information related to the income statement. We have to at first prepare the format of the income statement, and then we will have to fit. So there are some calculations that we may have to do. If you look at the values that are given to us, you would notice that the values or computations such as gross profit, net profit, profit before tax, profit after tax, these are not mentioned over here. So we are expected to calculate all that, and then we will have to prepare the income statement. Then we will have to go about with the preparation of the comparative income statement. So together, let us solve this question. So dear students, here as first we are about to prepare the comparative income statement. As a part of preparing the comparative income statement, at first we have to prepare the format. So the format I have already prepared over here. Then the next step is that we have to rearrange the item in such a way that we would be able to prepare the format of the income of the income statement. So there are some items that we may have to calculate, like gross profit, net profit before tax, etc. Okay. So we will have to do those calculations, and then we will have to go about with the preparation of the comparative income statement. So at first, whenever we prepare the income statement, we will always start off with the sales. From sales, we will have to subtract the cost of goods sold. Cost of goods sold has been given to us in the question directly. So let us calculate that. For 2019, sales is 15,70,000. Cost of goods sold is 9 lakh. So when you subtract, gross profit works out to be 6 lakh and then 70,000. Similarly, for 2020, the gross profit is 8 lakh. Okay, gross profit is 8 lakh. Now, this is the gross profit. From the gross profit, we will have to subtract all the operating expenses. So in other words, we will have to subtract all the indirect expenses. Now, what are the indirect expenses that we have in this question? Okay, where we have general expenses, then we have selling expenses. Selling expenses is 1,60,000. Then you have interest paid. Interest paid is 50,000. So that is also been subtracted. So this is for the year 2019. Then we have to look at 2020. 2020, we have 1,44,000. Then you have 1,80,000. You have 1,80,000. Then you have 60,000. Okay, so these are your operating expenses. Now from this, when you add up all this together, you will get your total operating expense. Okay, you will get your total operating expense. So you will get your total operating expense and total operating. So let's just quickly add up all this together. When you add up all this together, what will happen is it works out to be 3,50,000 for 2019. For 2020, it is 3,84,000. Now, how do you calculate net profit before tax? To calculate net profit before tax, you will have to subtract gross profit minus your total operating expenses. You have to subtract net profit before tax. You have to subtract your operating expenses from your gross profit. So for year 2019, that works out to be 3,20,000, and for year 2020, it works out to be 4,16,000. Now we have to calculate we have to compute the income tax. Okay, we have to compute the income tax. Income tax for year 2019 is 1,40,000, and here it is 1,60,000. Okay, it is 1,60,000. So when we do that, now from the tax amount, income tax amount, we will have to subtract from net profit before tax. Okay, we will have to subtract that from net profit before tax. So let's just quickly do that. For 2019, it's 1,80,000, and then for 2020, it is 2,56,000. So with that, we have completed the preparation of the income statement for year 2019 and then 2020. Okay, so we are just halfway through. Now we will have to go about with the preparation of the comparative income statement.
So what we have done so far is we have worked out the income statement. We have calculated the different components that you would be coming across when we prepare an income statement. Now we have to prepare the comparative income statement portion. Now, in order to prepare the comparative income statement, there are two important values that we will have to calculate. First is what is called as the absolute change. Now, absolute change would be year 2 minus year 1. So for us, it will be 2020 minus 2019. Then we have to calculate the percentage change. Percentage change would be absolute change divided by year 1 and into 100, because we are calculating a percentage. Absolute change divided by year 1 into 100 will give us, or it will fetch us the absolute, it will fetch us the percentage change. Okay, so now that we are good to go and we have got an idea about the format, let us start off with the calculation for this. So now let us calculate the absolute change. Absolute change would be year 2 minus year 1. Okay, year 2 minus year 1. For sales, the absolute change is 2,30,000. Percentage change is 15%. What does that mean? It means that sales has increased in 2020 when compared to 2019 by 15%. That's what it means. So now we have calculated the percentage change also. Let's go about with the calculation for the other items as well. So I request all of you to quickly calculate, and let me in the meanwhile calculate all the other figures here for you, and then we can go about with the discussion of the items. Okay, so let's just quickly do that, and I have worked out the calculations here, and I'll just quickly discuss the values also with you, and then we can have a discussion regarding the position of this particular firm. So with that note, let us just quickly do work out. So cost of goods sold, if you notice, the absolute change is 1 lakh, which translates to percentage change of 11%. Gross profit overall, it has increased by there's an increase by 1,30,000. Percentage change would be by 19%. So like this, we will have to go about with the calculation for each of these, with each of these changes, and then we can go about with the calculation. Now, there's one very important thing that I want to remind you. When you're calculating the absolute change, please remember it is year 2 minus year 1. What happens if you end up calculating year 1 minus year 2? If you end up calculating that as year 1 minus year 2, what will happen is your sign will be incorrect. If your sign is incorrect, it could be misleading. So for example, here, cost of goods sold, if you take that as 9 lakh minus 10 lakh, your absolute change is negative 1 lakh. So which means there is a decline, there's a decrease. It is not an increase, it is a decrease. So please remember the formula is year 2 minus year 1. So I request all of you to quickly calculate for the other items, and then we can have a discussion. Now that we have completed the solution of the comparative income statement, let's discuss the items one by one, and we can also have an evaluation regarding the changes that have taken place in the organization between 2019 and 2020. If you look at sales, sales has increased by 14.65%. Sales of the company has increased by 14.65%. Now, increase in sales, what does it signify? It signifies growth. It signifies that there are strategies that are adopted by the organization, as a result of which there are some changes which are taking place in the organization. Now, next, let's look at cost of goods sold. Cost of goods sold, it works out to be 11.11%. Okay, now, what is the significance of cost of goods sold? Cost of goods sold is the direct expenses which are involved. If you notice, your sales has gone up by approximately 14.65. However, cost of goods sold has gone up by 11.11%. So it is not a proportional. It is not a proportional increase. So this is one point that you could notify. Gross profit of the firm has increased by 19.4%. Gross profit of the firm has increased by 19.4%. Now, if you notice, with an increase of 14.65%, the company has managed to increase the gross profit by 19.4%. Now, this is something which is good. It talks about efficiency. It talks about efficiency of the organization. Next, if you notice, administrative expenses has increased by 2.86. General and administrative expenses of the firm has increased by 2.86%. Now, what is your general and administrative expenses? Basically, all these are your office expenses. You may need some kind of a support environment. You may need a support system to carry out your routine office activity, for your routine business activities, and the category of people who will be assisting you with that is what would make up this general and administrative expense. Notice over here, your sales has increased by 14.6%. However, your admin and general expenses has increased only by 2.86%. Now, if you notice, it is not a proportional change. You have increased your sales. However, the increase in your support systems, you did not have to account. So this talks about efficiency. You were able to achieve 15% sale by fine-tuning your support systems only by 2%. This is efficiency. This is a measure of efficiency. Likewise, similarly for selling expenses. Now, selling expenses, if you notice, it is at 12.5%, and your sales is, so this is more or less proportional. So selling expenses is in tandem with the increase of your sales. Interest paid. Now, when do you have to pay interest? Interest you will have to pay for your borrowed funds. Here, you have to accommodate more borrowing in order to accommodate for an increase in sales. Now, these are the items that we have to discuss, but there's something very significant that I want to bring to your notice, which is one is tax. Tax has increased. Now, the income tax is not something which is in your purview. It is not something which is within your control, because the income tax rate would be decided by the government. So it is something which is beyond your control. Next, what I want to bring to your notice is the fact regarding the net profit after tax. Net profit after tax has increased by 42.2%. The net profit after tax has increased by 42.2%. Now, if you notice, with a 15% increase in sales, you managed to bring about an increase in your net profit by 42.2%. With a 15% increase, there is a 42.2% increase in your overall profit. So this is actually a sign of efficiency for your organization. So we have prepared the comparative statement. We have also commented on the financial position, and with that we have managed to wrap up with this question.